It is actually impressive how you built the CPV listing, like how you pivoted, because that's not how you came in the game as listing photos, right?
Drone photos for listings.
That's how you came in the game?
Yeah.
This is your company, or is it?
Yeah.
Nice.
Yep.
How old are you?
24.
Sheesh. I thought I was young. Good for you, man. Good for
Crushing
you. That's awesome.
How old are you?
26.
Dude, that's still so young.
Yeah.
That's still so young.
Yeah.
Trying to.
34.
Oh, I thought you were younger.
Yeah. Yeah, so, black don't crack, baby. No,
Yeah.
no, yeah, I'm 34.
14-year-old?
Yeah, I had a kid when I was 20.
Oh, man.
And
I
yeah.
wish I would have done that.
You wish you would have done that?
Yeah.
Fuck no, you don't, bro.
Yeah.
That is the wrong move. You know the problem is that my 14-year-old now, since I'm successful and his mom is pretty successful too, he thinks that you should have a kid when you're young.
Oh boy.
And I'm like, no, bro, this shit is not the wave. We just figured it out. You can't. I'm 30. I'm like, bro, first of all, I need to be 50 at least before I'm a grandfather, And I'm like, but 20 is not, it's too young. So he can't even, he doesn't see the bullshit.
He wants to have a kid in a couple of years?
No, he doesn't want to have a kid, but
He'll hit puberty. He'll be in the midst of puberty. And you're like, I don't want a kid.
yeah, but no, he can't he thinks that he should have a kid young because he doesn't. I'm like, bro, at 23, you don't even know what the fuck life is yet. You can't do that, And he's like, no, because he's just trying to figure it out, But it's a problem. Yeah, is it started? Are we started? Yeah, we start. We just cold start, bro. It's no.
There we go.
You know what I mean? So we've been in the pod for a little bit. They're seeing you on camera. The blue Comeau on the. Is Comeau or Comeau?
Comeau. Yes,
I knew
sir.
that before.
Either way.
Yeah. So no, it's not. It's the Nick way. So, tell the people who you are.
Well, I'm Nick Comeau. I'm a loan officer. So, it's going well, man. I can't complain. Just trying to help anyone and everyone. I'll treat someone who's a janitor the same way I'll treat a CEO. Kind of was born into the business. Dad's been in the business for 30 years, but he works in the secondary market. So everyone's like Comeau Home Loans. We don't work together. That's my brand. That's my name. That's my business. He's secondary market, doesn't originate, works at a whole different company, but he got me in the business from one of his clients because his clients are mortgage companies.
Yeah.
So that's how I got in the business and has been at a couple different companies. And as a branch recently, New Res went to call center. Got rid of retail, so we all switched over to First Heritage in late July, early August, and from there it's just been taking off.
Yeah.
And I'm coming up on year 5 in the biz, and everything's starting to come together. The hard work, the networking, the connections, keeping the name out there. This whole business is word of mouth. Your name is everything, and that's what I've come to know. When transitioning from a company, and it was my second time transitioning, in the talks I had, it was your name is the reason people work with you. Half the time people won't even remember the company you're with. They'll remember Nick did a good job on that loan. We're going to give him business. Because I don't have a work number. I give out my cell phone number.
Yeah.
I take calls at 11 o'clock at night. It just, if my phone's ringing and I see the number and I recognize it, I'm like, I have to pick up the phone. It's not like, I look at it and I'm like, I'm going to push this off. I have to pick up the phone. It's the only way to keep doing it, and I'm 26, so I don't have kids.
Yeah.
I don't have a wife. I'm just trying to keep going and be successful.
Yeah.
I want to make some money, and I want to help people out, and I want to set myself up for a life to live that, thankfully, my dad set my family up for a life to live. That's my role model. So
yeah. That's great, man. You just bought a house, a few months, 6 months ago?
Yeah, August, right when I started. So in the process of transitioning jobs, I was buying a house. It was thankfully being in the business, the documents you need to get, the timelines you need to meet, so it makes it a lot easier. But
what'd you buy and where'd you buy? Did you buy a townhouse?
I bought an townhouse in Olney.
Okay.
So I have a buddy who's my roommate renting out a room, and got a good deal on it. Knew the owner selling it because I'm from Olney.
Yeah.
So I knew the owner, so got a good deal on it, hooked it up, and it's been good. And I would just say that's another thing. When people are making that decision to rent or to buy, you just have to look at it as a built-in savings account. I did my taxes this year, and even 6 months, you get your 1098, and I made a video about that today.
Yeah.
You get your 1098. That's a tax write-off. You can write off the interest in your home. You can write off part of the property taxes. So again, it's a built-in savings account. And it's something that you get every year.
So elaborate on that, right? So you're 26. You're I think the average first time home buyer now is like 36.
I saw that.
It's gone up,
Yeah.
right? I think I bought my first house. When did I buy? In 21. So I was 31. So I was a little late to the game also. But I got into the business at 26. So I was,
Right.
my database and the people I've been helping have always been like 24 to 34, right? I'm
Right.
34 now. And I don't think that people like your age and Bronson's age really can like comprehend like why they need to be buying. They think they kind of need to be. They're like trying to over prepare, right? So how do you talk to people in this age group and get them to understand that this is the right move?
Well, it's just about laying it down and keeping it simple with them. Like, people think you need to have a ton of money saved up to 20% down. They're worried about the interest rate. They're worried about the monthly payment. And I'm like, listen, there's two ways to have it. And I mean, I look at it from this way because I invest my money that I get every month. Like, I don't keep a bunch of money in my checking account. I invest it. I give it to my financial advisor. I say, do what you want. I want to make money. Like, that's where I'm thinking. So my thought is, everyone like, I want to put 20% down. I want to put 20% down. And I'm like, you don't need to. And my one take on it, and given some people do it because it's payment driven, they don't want to pay mortgage insurance. But let's say you're worried about the payment, go ahead, put more money down. But if you're not too worried about the payment and you can qualify for it, why not put less down? We've seen it every year. Homes in this area go up, up, and up. And it's really probably not going to stop. It might mellow out.
Yeah.
But I mean, it's going to keep going up. We live in a prime area. I mean, DC is always growing. It's the melting pot is what they call. And the one thing I say is you can have that money either going towards equity, which your house is going to go up, or you can have it in a money market account where it's going to go up, up, and up, invested with a financial advisor. So it just depends on where you want to go. I mean, you put it in a house, your money's still making money.
Yeah.
You put it in investment account, your money's still making money. It's about keeping what's comfortable with you. And if that monthly payment is comfortable with you at minimum amount down, I would say do the minimum amount down.
Yeah.
Or if you're going to have a roommate, then think about, okay, I've had buyers who have said, oh, well, I'm going to have a roommate. Okay, well, then you shouldn't really be too payment driven if you know you're going to have a roommate. And focus on kind of what you want and what you see yourself having. Is this like something that you're going to have and you're going to want to rent it out in the future? Or is this something that you're going to have and you're going to want to live there for 5 years and hope to have appreciation and sell?
Yeah.
So it's kind of like knowing that and knowing that information, and that's where I come in. I'm like, listen, I do the financing side. I know a good amount about real estate. Just growing up, my family invests in real estate heavily. My uncle develops in North Carolina. He buys land and sells it to builders.
Oh, that's great.
My cousin is becoming a developer in Pennsylvania. He had 38 units. He sold a bunch of them. He did a lot of rentals, and now he's going into the buying land, building. He's building 19 townhomes this year.
Oh, really?
And setting it up in Gettysburg, Pennsylvania. So he's in the new development now, and just it's kind of in the business, or in my family, being in real estate and stuff like that. So what I'm thinking is, okay, you can have it, and like my thought is, I'm gonna have this house that I have. Maybe I keep it as an investment. I don't know yet, but my obvious goal is I bought an only. Appreciation's gonna go up. So I think, depending on where it's at, I can sell it and use that for a down payment on my next house without taking any money out.
Yeah. When I first got into the business at 26, the first people you reach out to, at least on the realtor side, is, friends, family, sphere, right? And so luckily I was, popular in high school, and so I could reach back and say, hey, I just got my real estate license, I need your name, phone number, email address, home address. Like, I'm basically going to start marketing to you, right? But then it's like, hey, are you interested in buying a house? And everyone was giving me those same objections. Well, I don't have an 800 credit score yet, or I have student loans, or, I don't have 20% down payment, right? And so the foundation of my business and my career is built on first-time homebuyer seminars, where I was just debunking all of those myths. And even 9 years later, it's still interesting to see how prevalent all those myths are still. They're still around, right? People still think you need 20% down. They still think you need perfect, clean credit. These student loans, they feel like it's an issue. And so I think that, you do have to constantly educate people on, like, that these things aren't real, and you could bring 3% down. You can do MMP. You can do VHDA. You can do DC open doors, and sometimes come with 0 down or 1% down. The other thing you mentioned is house hacking, right? Which you're basically doing now. And I don't know if you intentionally house hacked, but that is definitely an easy way to alleviate some of that payment and have more cash flow overall. So did you intentionally house hack, or
I bought
did it
the
just
house
happen?
knowing I was going to have someone living
Yeah.
with me. That was one of the main reasons that I was like, okay, because we were playing around with the idea of moving to Arlington. We're young. Let's go rent a house. Let's live with a bunch of our buddies, have fun. And it's like, came to the time where I was like, okay, business started hitting. I had my sphere mostly in Montgomery County, where I do loans in a bunch of states, but mostly my sphere is in Montgomery County. My office is in Rockville. I was like, you know what? I saw this house on the market. I went to an open house, and I was like, oh my God,
Yeah.
it's turnkey. Everything's redone within the last 5 years. It was ideally what I wanted. So put in an offer, and it just happened. Knowing, I hit up my roommate before I put in the offer, who's my current roommate, and was like, hey man, like, I think I'm going to do this. He's like, honestly, I'm probably in. And like, that's like just what was like, okay, I'm ready to do it. Like, I only needed one, and came through, got a good deal on it, and it kind of helped out. But like, if you're young and you're looking to buy a house and you're like worried about the payment, or like don't know if you have a roommate, like if you're looking with a group of friends to rent, you guys all have to decide as a group where you want to live. If you're the one that's going to buy and you guys are arguing back and forth, what I've noticed is if you buy the house and you bring the idea to them, less work for them to do, they're in.
Yeah, they'll rent it out.
Yeah.
I have a few clients. I have one client, a good buddy of mine, went to him and his wife's wedding. His name's Ryan and Christina. And we're putting his house on the market in like 2 weeks. And then they're going to buy in McLean kind of their next 10-year
Right.
house, right? And we're on deal number 7, right? And so what he did was he bought 3 houses in a year. Like 3 houses over the course of 3 years, right? So he bought a condo, then he bought another condo, then he bought a townhouse with his now wife, and then he sold the condo. Now we're selling the townhouse, and we're gonna buy something else. And I think that people don't realize that they can actually do that. So I always say, if I could go back to 24, what I'd do is I'd buy a house every year, putting 3 or 5% down. I think you have to do it at 5%, and I would just get 10 of those. And then I know, like, that's the cap, right? So you know what I'm talking about,
10
right?
is the cap.
Can you explain what I'm saying, like, from the lender standpoint?
So, one, absolutely great idea. 2, I would say if you buy that first house conventional, you can go 3% down. If you don't want to put 5% down, you can have one FHA house, put 3.5% down. But it is true, the max that Freddie and Fannie will allow you to have on a conforming loan is, if you want financing, you can only have 10 financed properties. If not, you have to go into a non-QM, or maybe even try and get a commercial loan. But that probably includes you putting close to 20 to 40% down. Maybe It might be more than 20. I'm a residential guy, but I know it's up there for commercial. But you could go DSCR, which is debt service coverage ratio if you have more, and you just would strictly be buying it as an investment, where you put 20% down, and it's basically not income based. It's based off of the rent that you're going to charge, or the rental schedule that you're going to charge.
Yeah. So, but to be able to do that, you have to buy like laterally or up, right?
Correct. Well, you don't have to buy laterally or up unless you're buying it as a
Well, if
primary.
it's a primary. So if I do that and I say I'm going to commit to moving 10 times in the next 10 years.
Well, is it all going to be in the same area, or are you going to be buying in different areas? Because sometimes work's a reason, sometimes more space is a reason, sometimes you live there and you're like, you know what, it's not what I thought it was.
Yeah.
There's ways that you can write letter of explanations and things like that. That's why you always got to consult your mortgage advisor. So talk to the underwriter. That's what I like to do. Get the idea first, and then I'll get the file to underwriting just to make sure it works and make sure I can get a pre-approval.
So you mentioned underwriting, and it triggered me, right? Because I've never seen a job posting for an underwriter. And anytime there's an issue in the deal, not anytime, but most times, it's the underwriter being like, hey, this is an issue. You need to figure this out, right? And I tell my clients, like, I get upset about it, but when my clients get upset about it, I'm like, look, the underwriter's job basically is to hate on the loan, right? It's to like hate on it and kind of find issues, because they're going to sell the loan after the fact. So I have 2 questions, right? Can you explain what like an underwriter's actual job is better than me just being like, they hate on the loan? And then why do you guys hide the underwriter? Why can I never talk to the underwriter and clarify?
Well, I mean, we don't hide them, but they don't want to talk to anyone because they already get it from us. We want to make the loan work, but they want to make the loan work too. Shout out our underwriters at First Heritage Mortgage. They're the best. They rock. No, they really do. I mean, they're willing to work with us and make it work. But I think the main thing is being just as upfront as possible. When you're buying a house, you need to tell your loan officer everything, because more likely than not, if there's something I see that's even going to foreseeably be an issue, I'm taking it to my underwriter before I even issue a pre-approval.
Yeah.
I'm saying, like, let's review this. Like, can I make this work? Is it okay for me to issue a pre-approval on this? Because if not, then that's when you're going to come back and be like, what the hell happened during underwriting? Like, what's going on? So, you know, they do take the brunt of the force and probably the brunt of the blame, but they're great, and they do anything to help us make it work at First Heritage. We've done some things, and we've gotten some things done that, thanks to our underwriters, they found a way. They look over the guidelines. I mean, I know I have my underwriter working. Sometimes she works till like 10 o'clock at night. She has, and I'm like, geez, like, go to bed, please. I need you to be rested for tomorrow. But you know, they work as hard as we do, and they're not even in sales, so you know they want to make it work. And I mean, it's as well as the loan officer prepares a loan. When you got to take a loan, you got to tell the story of the loan, right? It's a story. You have two people trying to buy a house. It's a story. You got to write the story for the underwriter to review and make it seem like, okay, this should go to Freddie and Fannie perfectly.
So what does that mean? So how do you have to
like, let's say if they're self-employed, you have to say, okay, well, this is why their income has declined, or this is why their income is increased now, and things like that. Or if they're W-2, like, they get bonuses every year, but let's say they got bonuses yearly. Now they're switching to a job where they get bonuses quarterly. So 2 years ago, they were at a job where they received an annual bonus. This year, 2024, they were at a job where they got quarterly bonuses. Well, probably because if the quarterly bonus is higher, you have to average over 2 years. But if the quarterly bonus is less, it's just that 1 year of the quarterly bonuses. So it really just depends on telling the story. And it's just like, if you see something come up, you have to just paint the picture of why it can work, which is why you have to work with the underwriter before the loan if you see something being a problem.
Yeah.
So that you can help paint the picture, and then they can approve the picture that's going to go to that investor, or it's going to go to Fannie and Freddie, to make it seem like, okay, this won't come back to the company, and they won't have to hold it on their line until an investor takes it.
Okay. What's your what conversations are you having with people about interest rates right now?
The interest rates have been the same for 2 years. You've been waiting for them to come down. You can see that they're not coming down. So the thing is you've seen home prices go up.
Yeah.
Interest rates aren't going down. They're volatile. They're up and down. But if you feel like you're ready to buy and your income and assets make sense, just do it. Like, if you're thinking about doing it and you don't do it, you're never going to do it.
Yeah.
If you're thinking about doing it, just do it. Test the waters a little bit. Dip your toes in. Get an estimate. See if that payment would work, and see if you have this cash to close. And if you do, just do it.
Yeah.
The worst thing that can happen is you can always sell your house. Obviously, you don't want to foreclose and go through that problem. But if it helps your credit if you pay payments on time. And that's another thing I want to talk about is credit. If you have bad credit, like, I was looking at someone's credit the other day, and their credit was 575, but it's because they were an authorized user on their parent's account.
Ooh.
Their parent didn't have good credit. Got it removed, got him improved over 100 points.
Oh, really? How long did that take?
3 days.
3 days.
I pulled the credit. He got it done the next day, submitted it to get rescored, got it back the next day.
That's awesome, dude.
So 3 days, they got their credit up 150 points.
Yeah.
They didn't even know that was the reason that their credit was bad. They thought they had good credit.
Yeah. So somebody like that, why did they do like a pre-approval? How did you even get them to do a pre-approval?
I mean, it's introduction from friends, introduction from family, introduction from a realtor. I take the phone call, and I'm like, my first thing is I want to get them on the phone. If they don't have time to take an application over the phone, I say, well, let me do this. When you have some time, I'm going to send you a link, fill it out. It takes about 10 to 15 minutes. But if you have time right now for a 25-minute phone call, I'm going to take this over the phone, and I'm going to get everything, so that way when I have them on the phone and I'm taking the loan application, I see something, okay, this is their job. Well, are you self-employed, or are you W-2? Do you get any bonuses? I can kind of already paint the picture myself.
Yeah.
Because if I can get them on the phone, I can get that pre-approval within 2 hours. I mean, I had a guy who bought a house in December. He went under contract in November. His lender got fired. He wanted to write on a house. He didn't know his lender got laid off. One of my realtors connected me with him.
Yeah.
Called me on a Saturday at 12:30. He didn't have time to talk. Sent him a loan application. filled out the loan application, submitted all the docs, got them pre-approved at 2:30 that same day.
Yeah.
It's just about being available, really, and being able to know what questions to ask, which you learn every day on a loan file. You learn every day when you're helping someone buy a house.
Something new, yeah.
It's learning what you can do and then taking those learning lessons and then asking those questions so you don't make that same mistake again.
Yeah.
Because you need to know everything. Like if someone's getting laid off, if someone's switched jobs in the past 2 years, or if some of these jobs are they're subcontractors. So they work for an agency who assigns them to different companies throughout the year. So I've had a client who works for a agency that they're a contractor of, and they'll send their W-2, but
they're moving
they'll
from
switch to
contract to
different contracts every year. So they're working with one company for 6 months, then their contract's up. They're working with another company for 3 months. So it's like you need to make sure you ask those questions up front when you find out what they're doing.
Yeah.
For a loan.
Okay. What's your mix? Are you doing more? Are you working your sphere, or are you more a realtor-based kind of lender?
I'm trying to do both, man.
Yeah, so you are working your sphere. Because I found I've always asked lenders, I'm like, why don't you work your sphere? Because when someone comes to me and they want to buy a house, like the first person I'm connecting them to is a lender, because we can't do anything until they're pre-approved. So, So why did you decide to work your sphere, and why do you think that most lenders like don't make that decision?
I don't know why any lender wouldn't make that decision, but I would think that some of it is like, I guess like call reluctancy, right?
Okay.
Like some people don't like to cold call. I mean, you either have it or you don't, right? It's work ethic. So, and that's just the truth. It's you have it or you don't. Like people are in and out of this industry in all aspects: real estate, title, lending, insurance. It's like you hear about the money that you can make. You need a license. Once you get licensed, you think it's just, all your friends and family are going to use you. I've had friends that don't use me. I have family. My family normally does use me, but that's because my family has been based in real estate for a while. So but family won't always use you, and friends won't always use you, and your family members' friends, they'll try and get you a referral, but that doesn't mean they're going to use you. So it's just about brand. I mean, I post videos, you post videos. It's about keeping your name top of mind, and then also just reaching out. I mean, I try and have events. First-time home buyer seminars, things like that, showing people that you're educated, even if they can come to you for questions or anything about that. It's just answering the phone, picking up I have friends call me even about like something that's not even about buying a house, about financing questions.
Yeah, I think that's the same thing too. Like when people ask me about video, like why do you prioritize video, like social media? Now everyone does it, but I was doing it like a long time ago before it was really popular. And I'm like, well, one, I get to record a commercial every day for my business, right? Like I'm gonna put some content out that's a commercial for my business for people to know like what I do. And then the other thing is it lets people know that I have the information, right? So for my sphere or whoever's seeing me, they know, okay, well, Nick has the information. So whenever I have the question, this is who I'm going to ask.
Right.
And you mentioned top of mind. I always say real estate is less of a sales game and more of a top of mind game. Right. And obviously you have to keep in touch with your people so you are top of mind. But if you're putting out content and letting people know that you're the person that should be the resource, then when it's time, you're going to get that. Right. You're going to get that transaction.
Well, another thing I'd say about like the sphere, it's being involved. I'm involved in the community. I coach Little League football.
Oh, that's great.
I'm a member of the Olney Chamber. I'm a board member of the Olney Chamber. I'm in charge of the Young Professional Network in the Olney Chamber. I organized the whole Montgomery County Young Professional Network, which we have events once a quarter. I got all the chairs together of every chamber in the county and said, we need to do this because we get 80 to 100 people there. It's just keeping the name and associating your name with that, because then people see, oh, Nick, he's not just a member of the Olney Chamber. He also does mortgages. Yeah. Then it's the social media aspect, like you said. Social media is a free mailer. Not many people read the postcards or read the newspaper anymore. My dad still does. A couple other people I know still do, but it's more like the sports page. I mean, magazines even. Some people read magazines, but when you want to get an article, like when I want to get a sports article, I'm not going to flip through a magazine to read a sports article. I'm going to get the article that I want to read from the internet. Yeah. You know, so social media is the number one, I think, thing that's up and coming, and to reach the younger generation is that's where they get all their information. They get all their information from social media. So I'm out all the time sometimes, and I'll have friends come to me, oh my God, I love your videos. Like I see it all the time, and it's like, that's how you know it's working. Like people are coming up to you and saying, oh, I love your videos. People I've had that I've never expected to call me will call me and be like, hey, I'm thinking about buying a house. Like, I might not be ready right now, but what are some of the steps I should be prepared for? Things like, I'm like, if you're even 2 years out, 3 years out, 4 years out, I'll work with you just for when you're ready. I'll give you the tips and the keys,
Yeah.
the amount you should budget to save. Like, that's a big thing too. Because like you said, there is MMP. There's programs where you can come to the table with little to no money if you can get seller credit.
Oh, and you guys have a grant at First Home. You guys have a grant
First
program right
Heritage.
now, right? Oh, I'm sorry. Look, he's like, I'm sporting First Heritage. At First Heritage, you guys have a grant
We
program.
do.
So explain that.
Funds are limited. FHLB grant funds. It's two separate pools. So it's two separate pools. There's one pool that's the Affordable Housing Program. This is a grant. It's forgiven after 5 years. There's no payment on it. It goes up to $20,000. If you are a veteran, first responder, educator, and like firefighter, law enforcement, you're eligible for up to $20,000. You have to make below 80% of the area median income
Which is like
in your
120,
area.
right?
It's different and the 2025 hasn't come out and won't come out until May. But for 2024, we'll use for now. It's depending on your household size. So it really does depend. It's not 120 because that's Fannie and Freddie. It doesn't use Fannie and Freddie. This bank uses their own AMI. I do have a website calculator, so that's why I always say just reach out to me. But if you're not and you're a first-time home buyer, you're eligible for $17,500 instead of 20. And that's just if you're a first-time home buyer under 80% of the AMI. And now there's a separate one where it's repeat or first-time home buyer has to be buying your primary. This one's $15,000, fully forgiven, grant. Both are at the market interest rate, but the $15,000 one it's just a grant. It's free money.
Oh wow.
The second one is forgiven after 5 years, or the first one is forgiven after 5 years. This one, fully forgiven at closing. It's $15,000, and it's between 80 and 120. So if you're in that bracket of 80 to 120. And so like your friend right here is selling their home. If they're in that bracket of 80 to 120, they're eligible for $15,000, and they might not need it, but they're eligible for it.
It's good to have, yeah.
Yeah, and it depends on household size. So if a household of 6 is going to qualify for more or with more income than a household of 2.
And his household, 18 and up, or includes kids?
Includes kids.
So anyone.
If you're pregnant, you count that. I'm serious. I found that out. If you're pregnant, you can count that.
You can count on that.
Yeah.
Dope. What do you feel like buyers and sellers need to know about the real estate market right now?
I mean, if you're buying, I just want to let you know that interest rates aren't going anywhere. So if you're someone that's like, I'm going to wait till interest rates come down, you're going to be waiting, home prices are going to go up. So, and if you're selling your home, I think it's about a need. If you have a need to sell your home, as you know, then you got to sell it regardless of the interest rate. Talking to a buddy at the gym, he bought his house in 2021, has a good interest rate, but his wife's having a kid.
Yeah.
So he's like, it's not a matter of if we're going to sell it. We kind of have no choice.
Yeah.
My girlfriend's cousin is talking about moving. They're getting ready to have their second kid. They don't have any room in their townhome. They're talking about they're going to have to sell it. So
Yeah.
now it's a matter of, okay, those 3% interest rates were there. It was great. Now you have some equity in your home. What can you do to kind of go to the next step? You can take that money. You don't have to put it all down on a house. You're not going to get that same payment. That same payment's gone. So it's just going to depend on what you are comfortable with and the size that you need to accommodate for.
Cool. Thanks for joining me, man. This was great.
Yeah.
Where can people find you? How do they reach out to Nick?
I mean, cell phone for sure. And that's the best way because I'm looking at my cell phone always. So if you want me to drop my number, I will.
Yeah.
240-743-9785. But then another thing is I'm on social media, Comeau Mortgage, Nick Comeau on Facebook, and Nick Comeau on LinkedIn. So you can find me on all those. If you want to shoot me a DM, feel free.
That's awesome, dude. I would call Nick like a young, talented lender, but he's actually been in the business 5 years. So he's not young, he's like a veteran in the game who's just happens to be 26 and is totally crushing.
And like I said, you either have it or you don't. Like the work ethic, playing sports growing up.
Yeah.
Having that routine of just work. Like if you're competitive in this business, you'll be great. If you're not, like this is a competitive business. Given you have friends in the business, I have friends that are lenders, you have friends that are realtors, but if you see one of your friends doing this amount of business, you're like, I need to do that because I want to beat him.
Yeah.
It's you got to work hard. If you don't have the work ethic, then it's a hard business to be in because the hours are late. I've been working till 11 o'clock all week. I mean, it's busy.
Yeah.
If you don't want to put in the hours, it's going to be tough to make it. If you do want to put in the hours, then you're right for the business.
And if you do want to buy a house and you need financing, hit up Nick Comeau.
And if you need an agent, hit up Nick Bush.
Yeah.
There we go. Nick and Nick. Come on. You know how we do it.
Appreciate you, bro.
Yes, sir.
Yeah, that was good.